Pella has not been an investor in Japan for a very long time. We see that market as highly distorted by various things: monetary policy, fiscal policy. We don't see the Japanese economy as being strong, and we don't believe the valuations are that attractive or the corporate governance is that wonderful there. Although we are seeing improvements in several areas. An example is Hitachi. The bigger question that we focus on with Japan is what the BOJ is going to do, because that has a huge influence on the carry trade. And we saw in early August, when they increased interest rates, the impact that had on markets, and it was severe. So that is something we're watching very closely, and we continue to believe that the BOJ is highly unlikely to tighten or increase its policy rate further from here. First of all, as I alluded to earlier, we don't believe the Japanese economy is strong enough. The first quarter GDP number was very weak. Second quarter was an improvement, but all up for the first half, it was weak. Second of all, whilst inflation has been above 2%, it really has been imported inflation due to the weak yen. So that is very different to a demand-driven inflation. So we don't believe it makes sense, unless they're trying to protect the yen, to increase interest rates just because of that inflation. And thirdly, the deputy governor of the BOJ has said that they are going to watch what happens in global markets as they consider what to do with interest rates. And we know what's going to happen because we saw it in early August. Tightening interest rates further are going to result in a steep decline in the US market, and more importantly, perhaps for Japan, the topic. So we just don't believe it makes sense for them to increase interest rates right now. And we see Ishiba as supportive of that policy. So him winning this election, or him being appointed a new prime minister, does actually increase our resolve about the BOJ staying where it is.